Hello and welcome. You're watching the Business Today show with me, Chetty Narula. Let's start the show with the top news of the day. Indices ended the day flat with the Nifty marginally in the green. Sensex shut sharp with 50-point decline as Street awaits the all-important outcome from the US Federal Reserve. IT spends are here to stay. IT spending is here to stay, says HDFC AMC's Chirag Setalvad. This even as Street anticipates a slowdown in the sector. Overall, he views the large and the small caps as fertile grounds for investment. Sectorally, it remains constructive on auto ancillaries and financials. Huge relief for policymakers as consumer inflation cools to 5.88% in November, below the RBI cap of 6% for the first time since December 2021. Big fall in food inflation as well. But bad news coming in on the industrial production front. Factory outputs contract in 4% in October. Manufacturing down 5.6% is the impact of rising interest rates to rein in inflation. Placements in India's premier engineering institute are on. The oldest students bag hefty packages worth whopping 4 crore rupees from some of the top-tier companies. We'll get you more on that later on the show. Let's begin the show with all the action from intraday trading session. Today's stocks paired intraday losses but closed flat in anticipation of the all-important Fed meeting outcome, which is expected later this week. Amongst the benchmarks, the Nifty picked up in the final minutes of trading session, ended up marginally in the green, while the Sensex closed with a 50-point downtick on your screens right there. The broader markets had a day of relative outperformance. PSU, banks, oil and gas stocks were trading higher today. It was, however, not a very good day for the IT sector and the consumer durable sector as well. BPCL, Divi's Lab, Coal India, UPL, Nestle closed at the higher end of the Nifty today. So you go top Nifty losers right there on your screens. Amongst the laggards, we had Asian Paints, Infosys, Kotak Mahindra Bank, Titan and Eicher Motors all closing with cuts of over 1% each. How should you now position yourself given this kind of a volatility in the markets? What are the key themes to track and why are they the key themes to track? Business Today's global business editor Udayan Mukherjee had a chance to speak to HDFC AMC's Chirag Setalvad to understand his top sectoral and stock bets. Here's a slice from that conversation.
So let me ask you about, say, something like information technology, which is in business, which is in focus this week because of, HCL Tech said something and there's been lots of fresh worries about whether the sector can perform or whether some kind of ratchet down in valuation is required for the sector now. Where do you stand on a sector like IT?
So, just to put that into context a little bit, we've seen IT had a fantastic run in the last 1 year, right? Barring the last sort of couple of months, and valuations had become quite expensive. And now we've seen a reasonable correction in IT stocks and valuations have come to, I think, more reasonable levels. There is still a premium in the segment. And I think IT would still be trading at a 15-20% premium to its historical average. But I think a few things to keep in mind. I think IT spending is here to stay. And I think it's going to be quite meaningful even going forward. And I think the pressure which we've faced from a supply standpoint, I think that supply pressure is likely to ease. So I think there's some pressure which is going to happen from a top-line perspective, obviously, because you're seeing large global economies like the US and Europe, et cetera, slowing down. So that will put some pressure on discretionary spend in general, and I think IT spend in particular. So a little bit of a growth slowdown can be anticipated. But the question is, will it be more than offset by the improvement in valuations? We've seen improvement in profitability. We've seen almost a 300-400 basis point correction in EBITDA margins in the last couple of years. So I think there's an opportunity to claw back some of that. So I think in general, IT will continue to do well. So it comes down to valuations. And I think mid-cap valuations still appear a bit stretched. But when you look at large cap and small cap, I think there is enough of a opportunity at a stock-specific level.
Let me ask you about another sector, Chirag, which has been in a lot of scrutiny of late, which is public sector banks. I mean, they started performing after many, many years and they caught up really quickly. And now a lot of people are questioning whether they deserve to be bought at these kind of levels post-rally. But I saw Bank of Baroda in one of your top three holdings in one of your funds. Should I assume that you continue to be optimistic about some of these PSU banks?
So I think in general, we are constructive on the financial services space and banking in particular. And I think it's important to point out that banks have seen a tremendous improvement in their fundamentals in the last couple of years. So of course, we know that asset quality has seen a sharp improvement, and NPAs, which had peaked at 5-6%, have now come down to 2-3%. So in that sense, asset quality is in a far better place. At the same time, capital adequacy, which used to be 10-11%, has gone to a decade high of 13-14%. So in that sense, bank balance sheets are a lot stronger. And growth, which was anemic at 7-8%, has now bounced back to 16-17%. So you have better growth, a stronger balance sheet, and NPAs which are under control, which means banking in general is doing fairly well. Now, within that, to break it up between public and private, I think we're looking at valuations from a 10-year perspective. And the last 10 years is when the financial system, or banks in particular, we've seen depressed valuations. So we are comparing valuations to a 10-year period when valuations have been on the lower side. So I think we have to be a little bit careful of that. So just because something looks at in line or at a premium to the last 10-year average, is the 10-year average relevant? So one can argue that the 10-year average itself is not fully representative because it is lower than normal. And also, let me just a further point on that. I think there are all types of public sector banks. There are well-managed ones and there are not so well-managed ones. So I think we have to pick and choose franchises which have strong liabilities, which have strong management, which have strong distribution, and focus on those and avoid the ones which tend to be much more cyclical in nature. So I think it comes down to a very stock-specific approach within banks. But I do believe that there is a lot of further room for banks to perform going forward. There will be some pressure from a cost perspective because the deposit franchise is clearly not growing as quickly. But I think in general, we remain quite constructive on financial services.
There's another sector which has traditionally been a very happy hunting ground for mid-caps and small-cap investors, which is auto ancillaries. I mean, you own a cluster of them, of course, across your funds. But would you say that that's a place where you still find value and, more importantly, a good earnings runway for the next 2 or 3 years?
I think I'm very positive still on auto ancillaries. For the one of the key reasons is we find these to be very well balanced businesses. So they tend to be well diversified across OEM and aftermarket. They tend to be well diversified between domestic and export. They tend to be well diversified across segments, that is 4-wheelers, 2-wheelers, 3-wheelers, and so on. So compared to an OEM, which tends to be much more driven by a particular part of the auto industry. So obviously a 2-wheeler is driven by 2-wheeler and so on. I think in ancillaries, the business is much more diversified. It tends to be much less cyclical. And I don't think that is fully appreciated. I think the cyclicality of OEMs is very often immediately translated or transposed onto mid-cap and small caps. But these are businesses which are far more diversified with, I think, more stable ROEs. And I think valuations, if you pick and choose, there are reasonable valuations out there. So it's a segment I would remain constructive on. But again, it has to be a very stock-specific story.
But in this space, would you be preferring the ones which are more geared to the domestic market? Because many of these auto ancillary players are actually significant exporters. Given what's going on in the global space, is your preference for the domestic-facing auto ancs or even the exporters?
So I think in general, we would prefer domestic-facing businesses. Obviously, the Indian economy is doing far better than what you see outside of India. So to that extent, being domestic-centric is an advantage. So I think that's one part. The second is we are wary of EV, right? Because EV is certainly a big trend which is likely to take place over the next 5-10 years. So we want to look at businesses that are well-positioned from an EV perspective. Are they coming out with new products? Is the current portfolio well-insulated and so on? So I think we keep EV at the back of our minds. We keep the fact that domestic is a better business at the back of our minds. But even within exports, there are all types of maturities. There are some auto ancillaries which have large, mature export businesses, and those will be at risk. But there are others who are challengers. And if you're a challenger and you have 2-3-4% coming from exports, and if you still have low market share amongst tier 1, tier 2, and OEMs, then you can still grow. So it's not that we will avoid a business simply because it has an export orientation. We just want to make sure that they're with the right vendors. There's an opportunity to grow market share. There's an opportunity to enhance that business over a period of time. But in general, we are constructive on auto ancillaries.
What about defense? I mean, that's another space which has performed quite well over the last 6 months or so. But I know that you own a couple of defense names as well. But, this has been a sector which has flattered to deceive in the past. I mean, there have been many calls for a big play out in defense, and for 2 years, nothing happens after that. What convinces you that this time could be different?
I think we are seeing this genuine push towards Make in India. We're seeing a genuine push towards indigenization. And we can see that in order books, right? So this is not only a conversation or a story. It's reflected in the kind of order books that you have for large defense companies. And they're sitting on visibility for 2 years, 3 years, and so on, depending on which company you look at. So I think in that sense, the outlook from a growth perspective is reasonably sanguine. I think the outlook from a margin perspective is also okay because commodity prices are easing and so on. I think the key challenge is going to be on valuations because defense companies are now at valuations which we've not seen for a long period of time. So we always have to be careful when we say that this time it's different because usually it's not. So we have to be a little bit wary on that. But I think the opportunity for this segment is significant. And you can see that already in the kind of order books, like I said, that companies are sitting on. But valuations is the key concern.
And don't forget to catch the complete interview on our website, www.businesstoday.in, and our YouTube channel as well. Let's now slip into a very short commercial break. More news and updates coming on the other side. Stay tuned with us.
Cristiano Ronaldo's Portugal were eliminated from the FIFA World Cup, bringing an end to Ronaldo's dream of lifting the trophy. Here's a look at how a campaign that started so promisingly but ended with Ronaldo and the group in tears.
And it's a shame for Ronaldo, for Portugal. But
sport can often be cruel, and never was this more evident than when Cristiano Ronaldo broke down after Portugal's elimination from the FIFA World Cup.
It's Ronaldo, it's 1-0.
Their campaign had started well enough as Ronaldo scored in their win over Ghana, and Portugal beat Uruguay thereafter as well.
Portugal in front.
Son still going, support arriving.
But the warning signs began flashing when Portugal lost to South Korea, and it didn't help that Ronaldo's form had also tapered off. Ronaldo was named in the worst 11 of the group stages, and a fan poll revealed that up to 70% of fans wanted him benched against Switzerland.
Ronaldo starting for them today.
They got their wish as Ronaldo was dropped and his replacement Gonzalo Ramos scored a hat-trick.
In by Diogo Dalot and niftily touched home at the near post.
Meaning Ronaldo stayed on the bench against Morocco. He came off the bench with Portugal trailing Morocco 1-0, but was unable to bring them back into the game despite his best efforts.
And Bono wrapped it up.
His dreams crushed, there will be no happy ending for Ronaldo. But his legacy will remain untouched, even without a World Cup trophy.
a chance like that is not
Sports Bureau, India Today.
Welcome back. Aviation Minister Jyotiraditya Scindia was forced to make a surprise visit to Terminal 3 of the Delhi International Airport this morning. The visit follows a weekend of chaos at the airport where passengers were forced to wait for more than 3 hours before they could complete their check-in process and the security protocols as well. Take a look.
Massive queues. Delayed check-ins. and snags at the entry gate. All of this leading to hours of delay of passengers at what's been often touted as India's best airport, the Indira Gandhi International Airport in Delhi. The mess at the Delhi airport, particularly Terminal 3, which sees huge footfall due to international flights as well, has been one of the biggest talking points on social media.
कहीं ना कहीं ये कुछ मिसमैनेजमेंट भी है. चलिए एक बार को मतलब पैसेंजर की भी गलती हो सकती है, लेट आए, लेकिन जहाँ एयरपोर्ट में पहुँचते ही जब इतनी भीड़ मिलती है, फिर वो आगे फर्दर भी डिले होता रहा मेरा, एंड आई मिस माई फ्लाइट.
जैसे अंदर पे बहुत रश है, इसलिए फ्लाइटों को इतना भीड़ होने के बावजूद भी हम लोग 7:30 की फ्लाइट होने के कारण जल्दी आए, फिर भी यहाँ पे बहुत भीड़ हो रही है.
And Minister Jyotiraditya Scindia has decided to crack the whip. The Union Aviation Minister made a surprise visit to the Indira Gandhi International Airport amid complaints of chaos and overcrowding.
आज वहाँ जाके मैंने केवल सर्वेक्षण आज नहीं किया, वहाँ जाके उस क्रियान्वयन की पूर्ण रूप से निगरानी मैंने देखी. जो पहले हमारे एयरपोर्ट पे 14 गेट थे, आज दोनों तरफ एक एक्स्ट्रा गेट खुल चुके हैं, तो 16 गेट हो गए, ताकि जो यात्री एयरपोर्ट के अंदर आ रहे हैं उनके लिए सहूलियत हो पाए. उसी के साथ मैंने कहा है कि हर गेट के ऊपर एक बोर्ड लगना चाहिए, इलेक्ट्रॉनिक बोर्ड, बताते हुए कि हर गेट में वेटिंग टाइम क्या है.
After inspection, Scindia conducted a meeting with the officers and operation boards and issued key directions. The major reason behind the delay has been fewer counters and limited security staff. The airport also has a comparatively smaller space as compared to the daily passengers that visit the airport. And so steps like increasing entry gates, opening reserved rows, setting up electronic boards at all gates and increasing the number of lines for passengers have been put in motion. With Scindia's intervention, let's hope things get better at the Delhi airport in the coming days, particularly with the footfall only expected to go up in the holiday season. With Shreya Chatterjee and Paulami Saha, Bureau Report, India Today.
After 10 straight months of remaining above the RBI upper limit, the consumer inflation has finally fallen below 6%. CPI for November was clocked in at 5.88%, much below the 6.77% clocked in October. It is, however, much above the 4.91% mark, which was registered last November. The RBI had last year set a target of 4% for retail inflation, with a margin of 2% on either side. Importantly, food inflation came in at 4.67% in November, a huge drop finally from the 7.01% in October. While prices of vegetables dipped by 8.08% in November, cereals were up nearly 13%. Dairy products were up 8.16%. Spices were costlier by 19.52% in November. Business Today's managing editor Siddharth Zarabi also caught up with Rajni Sinha, the chief economist at CareEdge, to discuss India's inflation print and the road ahead. Here's a slice from that conversation. Take a look.
Rajni, your first reactions on inflation, even as IIP has shown a significant slide at -4% for the month of October, but starting with inflation.
I feel with food inflation coming down and specifically with vegetable prices inflation coming down so sharply, it should help in containing inflationary expectations, which would overall be good, and it would help eventually, it would help the core inflation also to kind of come down from these levels. But having said that, core inflation has been found to be very sticky, and it would be a challenge to get the core inflation down to more comfortable levels.
What do these numbers mean as far as policy making is concerned from here on?
So I think for the policy makers, I think RBI has quite clearly indicated that they are going to go ahead depending on, what kind of data points we see going forward. I feel there's still chances of another 25 basis point hike in the next quarter. And I am basing this mainly on the fact that, as I mentioned earlier, the core inflation still remains high. Household inflationary expectations still remain high. So while the food inflation has come down, RBI would also like to wait and watch and see if this is sustained over a longer period of time, and if this also helps in some reduction in core inflation eventually. But the reduction in core inflation because of food inflation going down, all that, that kind of second round impact will take time to happen. So given the situation currently, I would still say there is a chance of another 25 basis point rate hike by RBI in Feb.
How would the RBI also interpret some of the industrial production data? Now, there is some bit of volatility that we see, and the month of October was also the month of Diwali, and therefore, how do you see that number?
So, yes, the industrial production data has come as a big negative surprise. While we were expecting this number to be lower simply because of high base of last year, but we were not expecting this kind of contraction. So that does come as quite a disappointment.
In terms of inflation, and I'm just skipping back to that in the context of manufacturing production as well, are you now able to say with certainty, if I were to question you on whether inflation has peaked in India, the recent spurt that we saw, has that peaked now, and is therefore inflation being below the RBI comfort level at 5.88%, really something that we should say is likely to continue?
We were not expecting this sharper fall in inflation in the month of October. So there is a chance that going forward, because it has gone down because of seasonal impact of some of the food items like vegetable prices falling sharply, there are chances of it again going up going forward, but not in a very sharp way. I would say inflation has broadly peaked, and we should see it moving around 6% or so. Statistically, we may get a little higher number going forward, because if it's because of volatile component, we may see next month that increasing. But broadly, having said that, broadly inflation has peaked, and we are likely to see it moving below 6% in the next few months. But even with that, the concern would remain, because like I mentioned, core inflation is still high. And second, as you would have seen, RBI governor in the last meeting was talking about the mid-level of the range of 2 to 6%. So RBI is now looking at us eventually moving to around 4% level of inflation. And that is going to be quite challenging if core inflation remains sticky around these levels. So as per our estimates, we do not see it touching 4%, inflation touching 4% even in FY24. So if I look at whole of FY24 also, we are expecting average inflation in the range of 5 to 5.5%. So to achieve RBI's target of 4% inflation would still be a challenge, but getting it below 6%, we are there, I would say.
And December has chimed in the placement season for IITs, India's premier engineering colleges. The top offers have so far been of 4 crore rupees per annum made to students at IIT Delhi, Kanpur and Bombay. Akanksha Chaturvedi helps us get some perspective on these trends. Take it away, Akanksha. Tell us, what are some of the top trends in the placement season this year? How is it compared to the last year? And despite the big tech slowdown, that's the most important part. Why is it that despite that, the IIT placements are far better than last year?
Oh, like you just mentioned, students have gotten offers that are paying them 4 crore rupees per annum. These are to students that went to IIT Delhi, IIT Kanpur and IIT Bombay. 3 offers were made not by an engineering company but by a high-frequency trading firm, Jane Street. Moreover, many such offers that are non-core, that are non-engineering jobs were made to IIT students. Companies like BCG, Bain and Company, McKinsey made offers related to consulting, other roles which IIT students, despite their engineering degree, they chased were in product management. So there has been this trend which is being noticed since the past, placement sessions, that students are opting for non-engineering, non-core jobs. Experts believe that this is because the non-core profession might not pay as well as these other professions, in the management field might pay. Moreover, another trend that was noticed is the fact that the 1 crore plus packages were more, the number has increased at newer IITs like IIT Guwahati, but it has decreased in older IITs like IIT Delhi, IIT Kharagpur, IIT Bombay. More students, as compared to the last year, got offers that paid them more than 1 crore in new IITs, and this has not been the same in the case of older IITs. Another thing that was noticed is that many international offers, students got international offers from countries that are from the East Asia, countries like Japan, Taiwan, South Korea. Instead of countries, usually international offers were from countries in the Europe or from the US. But since there is a looming economic slowdown in those countries, experts believe that the offers have reduced from there, and hence the international offers are more from the East Asia. So back to you, Chetty.
Well, all I can say is it's raining placements at the moment for IIT graduates, and that's always good news. Thank you so much, Akanksha, for that vital perspective on this story. With that, it's a wrap from me, Chetty Narula. Keep watching India Today, and thank you so much for tuning into the Business Today show.
Prime Minister Modi himself, who was in Maharashtra just yesterday, in fact, as he launched this scathing attack on the opposition, he spoke about shortcut politics that the opposition indulges in,